Yes. Hey, everybody. Hey, how are you? As usual, we're BSing here in the studio. Welcome into the live stream. We're here every Tuesday and Thursday religiously, even though Paul's not religious. We're here every Tuesday and Thursday to bring you new content, live content, to hear your thoughts, what's going on in the world. And today we are analyzing stocks like we always do. We are analyzing the sin stocks, so cigarettes, some tobacco, some Vegas stuff, everything that Paul's into when he's off the show. And with that said, I welcome in the second sexiest man in the room, Paul Gabriel. It's Paul, right? How are you?
I'm great. How are you?
When Paul's not on the show, he's searching the chat lines for women, Bumble and Tinder. So that's why we just caught him off guard there a little bit. And we have Mo behind me. Mo, welcome in with your charts.
Hey guys, how are you doing?
Mo's got his new table. He's ready to go. We're going to bring you some momentum movement on these stocks and Paul's take. So I welcome in the man, the myth, Paul Gabriel. How are you, my friend?
I'm awesome. How are you?
You know dang well how I am because we've been podcasting for 2 hours. We've been recording shows for the last 2 hours. But I love you.
Don't care.
And we welcome you in. We have been told that we're a little heavy-handed on the Patreon plugging, so we're going to back off just a smidge. We know we love you out there, but a lot of people saying, you know what, enough is enough, and so a little less, and we'll give you a little less. We're incredibly excited about it. We talk about you guys all day. So the 750 patrons, Paul and I, Mo and Don, all day.
What's going to happen is...
Go ahead, Paul.
What's going to happen is the Patreon price is going to go up, and everyone's going to be like, why didn't you tell us? I'm like, well, I did tell you.
We are getting that. The Patreon is filling up. The levels are filling up, and when they do, we're going to charge more. The content is incredible. We did research on other patrons out there, on Patreon pages, and the things that you get in their top tier level is as extensive as a coffee mug for some, or a 1-hour Zoom chat that's restricted for the highest levels. For us, you get access for the highest level in our Patreon. You get access to full access to Paul and Mo, their daily trades, what they're doing. Paul came to me today and said, we should really get into covered calls for you, because I think you can make an extra $1,000 a month, which would be absolutely life-changing, Paul. So for someone with...
Not life-changing.
Well, it really would be, but for someone with a $400,000 portfolio to get into covered calls, you can do this.
How is that life-changing for you, Seth?
I mean, $1,000?
First off, it's going in your retirement account.
Yeah, but I mean, it's just
I will say this, though.
It's $12,000 of just like working a bit. Go ahead, Paul.
That's your tax-free account, right?
Yeah.
So let's say you're able to do 10% a year.
Go ahead.
For 30 years. Oops, hang on a second. I'll tell you exactly what that's going to be. Here's how important that is.
Go on. The show's come to
an extra
crashing.
$2 million.
An extra $2 million?
So next time you tell me, like, Paul, I need more money, I'll be like, I just gave you $2 million.
Yeah, so it is life-changing. Thank you. That's what I said in the first place.
Well, it's not like that. But your other portfolio is going to be $10 million. Like, if you do it the right way, you'll have $10 million. So $2 million is great, but it's not changing your life at that point.
Well, I mean, the mindset of making our money work for us through some options would be incredible. And so you can get in on this. You can get in on this action if you join the middle level Patreon tier. You get access to Trader Mo and his momentum trading, day trading, and Paul and our options, so the puts, the calls, all of it. So we will get into it now. We're glad you're here. As always, make sure you're tickling that thumbs up. As I always say, that Paul likes his nether regions tickled and his little white belly there. Like he dressed like the Pillsbury Doughboy today, and so you can tickle that thumbs up. We certainly.
How can I put these?
The dad bod. Yeah,
a little camel toe going here.
Dude, that's that Progressive commercial where you're turning in your dad.
Yeah,
you look
right.
incredible.
Yeah.
Paul,
should I refinance my house?
Paul definitely printed off directions to get to the studio today, so he's in the right spot, and so are you. Paul, let's talk about these sin stocks and your take on them. Go ahead.
Yeah, I don't really know.
Great. Listen, the content we're bringing you on Everything Money is just
what
incredible.
What do you want me to say about the sin stock? Like, I don't like the fact they call them sin stocks. If that's what you're getting at, I just think that's a ridiculous thing to call them. It's more of it's kind of like the whole pay your fair share. It's a spin way of getting people to feel guilty for doing these things. But it's a sin stock because, cigarettes, alcohol. Are guns in there?
I'll just take over, Paul. You're really doing well today. Let's go straight to Philip Morris is the first stock.
What do I pay you for then if you want me to host the channel?
If our first stock is Philip Morris, a cigarette company. Paul, you don't smoke. You've never smoked.
I never have smoked.
But you're intrigued by what the people overseas maybe start smoking here in the near future. I know it's huge over there.
As countries develop more and more, and poor countries start getting more money, it's a very burgeoning market for cigarettes. A place like Bangladesh, and I'm just throwing out a country. It makes the average person makes like $500 a year. As they make more and more money, I'm sure cigarettes will be a part of that. So in the U.S., I think I remember hearing once that in the U.S. a quarter or a half of people in the 50s and 60s smoked. Is that accurate, do you think?
Wow.
Half?
25%, half. It's down to like 15%.
I know.
25, I would believe.
I do know. Yeah, you're correct, Paul. In the Southeast Asia, everybody smokes, and it's definitely an emerging market for maybe. Now I don't know if Philip Morris. We will do Altria. Fishy Face is saying, how about Altria? Yeah, but we'll do a little bit of that too. So, Paul, let's get into it. What is the market cap for Philip Morris?
The market cap for Philip Morris is. Look at this right here, real quick.
Go ahead.
The smoking rate amongst different countries.
Okay.
On Wikipedia. This is 2015, though. Look at how low the U.S. was. 17.2% in 2015. In 2008, is it here in 2008? Yeah, either way. The whole point is we're number 72. It's as high as, where the heck is Kiribati? Does anybody know where that is?
It's near New Jersey. Keep going.
52% of people smoke. Of 110,000 people. Jesus Christ. Okay.
Paul,
So,
before we start Philip Morris, the people want to know what's on your wrist today.
this is the Hublot Aspen edition.
I like that
Big
one
Bang.
the best. Yeah, very nice.
It's a beautiful.
All right, let's get into it. Philip Morris, what's the market cap for this company?
Guys, let's call it $130 billion. PE ratio, 16.76. So check mark there. We want it below 20.
Yeah. Okay, how's the profit margin going?
Look at this profit margin. Jesus Christ. 30%.
Wow.
Check mark there.
Okay.
Looks like Jesus loves his cigarettes.
What is? You mean Jesus?
Jesus loves his cigarettes.
Revenue growth, pillar number 3.
Well,
Paul.
wait a second. We have a thing called a dividend here, Seth.
How's the dividend?
6% on 130 billion. What is that? Yep. $780 million. Yep. Did I do the math right? Somebody please tell me I did the math right.
Spicer, figure it out.
$780 million. So guys, we want to look at the free cash flow and make sure it's supported there. So let's keep that in mind.
What does Jesus have to do with this, Paul?
Well, my joke is that, okay, did somebody ask that or are you asking that?
I mean, folks, if you're watching, you know I love
wrong.
you, and it just all we think about is you guys all day. It's taken over our whole lives. But I just realized.
By the way, that is not exaggeration. Like literally, it consumes
our day. I can hardly work talking about you guys. David says something's wrong. Dividend
wrong
is
in
wrong.
math.
Double check. Of course, David Spicer, our co-host abroad.
So the
yep,
dividend-
$7.3 billion.
He listen. He's a math. He's just like.
$7.3 billion.
Yeah,
I keep
he's
looking at the
just-
128. $7.3 billion a year.
Okay.
Thank
yeah,
you.
But folks, I would say, Paul, it hit me yesterday. This is we're a comedy show based on numbers.
Well, that's what I told you before I wanted it to be. You
I
what mean?
know. So if it's too much comedy, guys, to hell with you. This is who we are and how we're going to do it.
quant is
Okay,
having
pillar number 3
hiccups.
is revenue growth over the past 5 years.
$7.3 billion. God, my math has been off on these dividends.
Yeah. Okay.
All right, so $74 billion here and 77.9. But keep in mind, guys, look back here. They cleared 80 a couple times. This is a big drop here in 14 and 15. So I'm wondering if, not that it matters, but I'm wondering if there was a sale of something at that point. But either way, they do have $74 to $78 billion. It's a check mark there.
Okay. Profit growth is pillar number 4. You think I know these by now, but I don't. Keep going.
You do know them. 6.9 versus 7.2. Check mark there. Very steady, very steady, very steady. Steady Eddie.
The tattoo shop. Pillar number 5 is shares outstanding.
Wow, I'm actually
We want
surprised
this
by
going
this.
down. What's up?
It's actually an X, slightly up, not by much. But that's slightly up. I'm actually surprised. I thought there was going to be massive, because I look at a company like Philip Morris, and in order to, you think that, okay, we're in cigarettes, probably not a growing market. So how do we give more back to our investors? We buy back shares. So I don't know. I was actually surprised. I thought it'd be significantly lower.
So it's an X for shares outstanding. They're selling more. Let's do current assets over current liabilities is pillar number 6, baby.
17.45 versus
Come on.
15.52. That's a check mark.
That is.
Is that my phone?
That is 5 checks and an X. Free cash flow growth is the granddaddy of them all. Free cash flow growth, Paul.
Free cash flow growth. Okay. So guys, look at this. Huge free cash flow. And here's what I like about it. Their capital expenditures are not a big chunk of their free cash flow. Even in their worst year, it's not even 15%. I mean, maybe it's 18%. So it's very low. So let's call it let's call it 6.9 versus 9.2. Check mark.
Okay.
And then 6.9, and then 7.4, and then 8.
Nice growth, huh?
Yeah, it's very consistent. I like it.
The average is 7.7. My apologies. 7.7 is their average free cash flow per year.
Okay, so now, guys, we have to talk about what multiple we're going to apply to it. Now, the positive of this company is even with a declining market, they're still able to increase their free cash flow pretty consistently over time. Low capital expenditures, I like that. Obviously, Philip Morris is a well-known, but like what brands do they have under their umbrella? I mean, it's a ton of brands, right?
Well, you said that we were talking about Philip Morris and Altria, and you said, aren't they the same? And A. Bittler saying that maybe they want to merge. That Altria, which we're looking to do next, and Philip Morris want to merge.
Is that being talked about, or is that speculation?
Maybe so. So
I don't know if the government would allow that.
say that again, Mo, one more time.
I don't know if the government would allow that. That would bring monopolies into the question.
They said that about Sirius and XM. That was a huge concern back in the day with that radio, but we'll see. Okay,
All right, so
what is your multiple for price to free cash flow, Paul?
Let's say it's times 20. That is 154.
Yep, 154.
What's the market cap?
130 billion.
Oh. All right, so if you believe 20 times multiple is a good multiple for this, you're going to check mark here, go do more research, figure out if you want to buy this.
Check, please.
The only thing I have a problem with is this.
Go on.
Their average, now granted it's the average, last year they did 9.2 billion, they spent 7.3 billion on dividends. So they're paying out a lot of their profit to dividends. Let's see how they did in the last 12 months, COVID time. Oh wow, $9.3 billion in free cash flow.
That's much higher than their average of 7.7.
Yeah, so, I mean.
You're liking cigarettes now.
I mean, hey, send me to school with a bunch of cigarette packets. I'll just start handing them out to kids.
Great plan.
Is that crickets?
I missed the crickets. They're a little late on that.
I mean, I'm not opposed to this one. Mo, what's your thought from a financial standpoint?
Yeah, let's go to Mo for more money, more problems, momentum.
Let me read this to you. On January 2003, Philip Morris Companies changed its name to Altria Group. Even under this new name, Altria continues to own 100% of Philip Morris.
Oh,
wait a minute.
I thought they were the same
So,
company.
Paul, you were right. You were right. They are one company.
So let's do the fundamental or the technicals for this. So the first thing that I noticed when I zoomed out on this chart is about $93 dating back to March of 19 is they kind of can't break that resistance point, and they're kind of getting up there with this 82, 92 number. So that's going to be very heavy resistance for them to get through. Now let's zoom into now.
And if they get through it,
if they get through it, they can go. Absolutely. It's just a matter of can they generate that kind of volume, do something, new product, something that can really boost them up. Right now, though, they're having a great day today. They're up about 3.5%, but their overall trend is going right down in the sweet spot. So if this is me and I'm playing this, I'm not touching this right now. I'm just going to let it sit and figure out what happens. If I do get a day like this tomorrow with a big candlestick, a big red candlestick in the down direction, then I'm starting to think about some kind of short on it. So that's the momentum for this one.
If anyone owns this stock, put in the comments if you own some of it and how much you have and maybe why you bought it.
On it.
Yeah, Paul, you're saying you have puts?
I think so. I have it. Maybe I have it on.
You have it on Altria.
Altria.
MO. Yeah.
Yeah. People are talking about British Tobacco, which we've analyzed in the past, and we liked actually, Paul. We were big fans of the company. Maybe not so much what they're doing with it, but.
So should we look at some options for Philip Morris?
Yeah, please do.
All right, guys. So since it's kind of maybe in the money here, maybe. Oh, hello. How you doing, kids?
Make sure you guys are tickling that thumbs up. We love you out there. Paul,
so remember what we do with options. Selling puts is a way to get a position on a company and being paid to wait. So as an example, Philip Morris is currently at 83. Let's say you're like, okay, I like it, but I'm not in love at 83. I want to buy it at 70. March 19th, 2021, that is 44 days from now, you can sell a put and get 47 cents. So what that means is you're going to be paid 47 cents to wait. What's your return? On a put, it's the premium divided by the strike price. What's 0.47 divided by 70?
Sorry.
I'll do this right now myself.
I got it, Paul. 0.47 divided by 70 is 0.0067.
Divide that by 45.
Divided by 45 is 0.00014.
Multiplied by 365.
Times 365 is 0.054.
So 5.4% return, annualized return.
Wow, look at that.
You're gonna be paid a 5.4% annualized return to wait, which means if you did this over and over, 44 or 45 days out, over and over and got 47 cents, you'd make 5.4% return on your money. That is what I do with options. That's what I do with puts. I pick price in the future. Now, I can go out further. Let's say I really believe this company is gonna be stable for a long time. I might go to January 2022. The further out you go, the more money you'll be paid because it's more likely that things hit. So the same $70 put here, you're now getting $4.58 per share, but you got to wait 352 days for it.
And there's a 27.5% chance of that occurring.
The delta is 0.275, which means there's a 27.5% chance that you will be assigned these shares at some price below 70. So these are the things we do. I don't believe in going long-term unless it's a very, very volatile stock that's been hit hard. We did it on Carnival Cruise Line and Love. Southwest Airlines because the volatility was so high that basically if you thought it was going to stay in business, we were making 20% annualized return on our money just by waiting. If I just thought it was staying in business, I was going to make money. There you go.
So final take on Philip Morris.
I say look into it further. I'm not opposed to it. In fact, I'm going to look at it myself.
Yep, I agree with that.
Paul, how do they calculate the deltas based on what factors? Omer's asking.
It's volatility. It's a bunch of, I don't know how delta is exactly calculated. It's all done by computers or some guys and all that stuff. It all depends on volatility, where the stock is, where it's going, et cetera. I don't know how it works. And it's not, the whole point of it is each and every, it's just like buying an insurance policy, selling an insurance policy. If you sell an insurance policy to Seth, there's a 0.5% chance he dies in the next 30 years. Okay, fine. But either he's going to die or not going to die. If you sell it to 1 million Seths, you're going to have 5,000 deaths. That's the point of it. It's so I like doing puts and calls on a portfolio of stocks that I want to own and a portfolio of stocks that I currently own. Overall, I plan to make X amount of dollars on them and move forward from that one. To do it on an individual one, just one at a time, is too difficult.
That was odd, referring to my death in the next. I thought you were going to say 30 minutes. I mean, that's also an
I
option.
said 30 years.
What
are the chances of you dying in the next 30 minutes?
I don't know. I'm probably not that high, I would hope. Don, will you call in an insurance policy while we're talking about it? Samit High is saying, in your Patreon, can I follow personal options trades? Yes, the top tier?
So the top tier gets my trades as they happen. Like today, I talked about my trades that I did. Yesterday, I talked about my trades that I did. In the other tiers, you still get access to my portfolio on a weekly and monthly basis, just depending on where it is. It won't show total dollar amounts or percentages. It'll just show what I own and what I don't own.
Goldie's saying, what is the delta in options on my livelihood or me living? Options on Seth. That's a great point. Who knows what that is? Let's see. And so Paul, final take. Let's look at Philip Morris. Obviously, the market cap we came up with is
154.
More than the current one. So this doesn't happen often, but this is great. This is a great take.
So let's go to Altria.
Okay, so Altria.
Because I'm very confused here.
Yeah, I'm too. Other people saying I have Altria and I like it better. So let's look
at this. Why? So
Altria
if Altria
Group
owns Philip Morris,
I have the answer.
why is there? Okay, Don has the answer.
Go ahead. Hold on a second, Don. Go ahead.
So according to GoHawk in the chat, PM is, give me 1 second, let me find the answer. PM is the international business and Altria is US. They are two companies who used to be one. So they basically split.
Oh, yep. A. Bitler is saying the same thing. Thanks, Don, for the update. That's the wonderful Don, wonderfully
Does this
handsome
guy know how
Don.
to party or what?
He's not the best color commentator in the league for nothing, Paul. All right, let's
No,
do.
you know what that's from, right?
What's that? Wayne's World?
Yeah, it's from Wayne's World.
Okay,
Who did you say it to?
I can't remember. Is it the arcade guy?
Alice Cooper.
Oh, Alice Cooper.
Remember, Al Cooper's like, which is Millie Walk, which is Algonquin for the good land.
Okay, great. Paul, let's do Altria Group. Ticker symbol is MO. Let's get after it. What is the market cap? Sweet baby cheeks, Paul.
$80 billion, give or take. 17.7 PE,
Wow.
check mark. Massive profit margin.
Good Lord.
It's over 10%. That's a check there. Last quarter was 38%. Dividend, 8%.
Wow.
Okay, I'm going to do this right this time.
Please do.
$6.4 billion dividend.
Like talking?
Two checks, $6.4 billion we need to cover in free cash flow to cover that monster dividend. That's almost as much as Philip Morris itself.
Yeah, that's right.
Huge dividend.
Revenue growth is pillar number 3 for Altria Group.
Revenue growth, 25.65 to 26.15. Very, very little. Oh, by the way, Altria already has its financials for 2020 up. Philip Morris did not yet.
So this is next? Oh, no, it's up.
Guys, this is very, very low growth. I mean, it's basically the same. It's $500 million more in freaking 5 years. That's not very good. But again, people don't like cigarettes.
Okay, pillar number 4 is profit growth.
Does anybody here know somebody who smokes cigarettes?
Sadly, my mother has for 50
that's
years.
Right. How about a friend our age? I think I know one.
Yeah, I mean, you haven't been on like a construction site or truckers. You see them driving down the road. I mean, it's still huge.
Right.
Yeah, keep going, Paul.
All right, profit, 14.2. Jesus Christ, to 4.5.
Uh-oh.
Yikes.
Okay, so that's how it's going to be.
Oh, my phone is.
Y'all want to play.
Uh-oh.
What the heck is going on here?
So profit is down bad, huh?
Profit's down huge. I don't know what's going on there. What is it? But I will say this. This looked like a.
Yeah.
Well, but Mo went 14.2, 10.27, lost 1.3, 4.5.
Yeah.
All right, this is where I'm going to look at free cash flow especially.
Okay, before you get there, you want to do shares outstanding?
I would
Stay on
love
point
to.
here. So profit growth is down. Oh no. And shares outstanding, we want this number going down as well.
Check mark. It is going down 1.95 to 1.85, about 100 million shares less of 5% of its outstanding shares.
Okay, current assets over current liabilities is pillar number 6, baby cakes.
7.1 billion versus 9 billion. X
Oh
there.
boy, oh boy, oh boy.
I'm actually liking Philip Morris more than Altria right now.
too.
Now let's see their free cash flow number.
X for current assets. Free cash flow growth is pillar number
Wow, look
7.
at, like no capital expenditures here. Incredible. 3.6 billion, 8.1, billion. Check mark there. 4.7,
Oh Lord, now I got to do my calculator, Paul.
8.1, 7.6. So 8.4, 16.5, and 15.7 is 32.2. I think divided by 5 equals 6.4. Nope, that's wrong. Yeah, 6.4.
Yeah, it's 6.44.
But,
You're correct.
But it's increasing quite nicely.
Kartik's saying they had a big write down recently. I don't know what that is.
By the way, that's what when you have a was that Jewel? That was the Jewel write down they had. That was on their net income, not the free cash flow. You got to remember that. That's why when we look at the net income, I said I'm going to go to the free cash flow number. The net income was dropping and dropping and dropping, and look at the free cash flow number. It's growing and growing and growing. So this is currently selling for 12 times free cash flow.
So give me a second. The 8.1, their dividend is 6.4 billion.
Yeah.
So they have that covered.
They have that covered, not by a ton, but they have that covered.
Average free cash flow is 6.4 billion.
So they're currently selling for around 12 times free cash flow. Does that sound about right? 12 or 13. So it's a check mark there. You got to decide for yourself with no growth whatsoever, monster dividend. Are they gonna stay stable? Are they not gonna stay stable? I don't know. But it seems like it's a pretty interesting play here. It is a lower multiple, I think. I definitely know that than Philip Morris. So I don't know. It might be better for. I think these both look pretty decent. The free cash flow number is huge.
Well, you got to like that 8% dividend
And
too,
the capital
Paul.
expenditures are so low.
The capital expenditures here are lower than Philip Morris.
Yeah, it's incredible.
As a percentage of free cash flow. As a percentage of cash from operations.
Yeah.
Other people are saying they do indeed prefer Philip Morris over Altria. Altria has a habit of overpaying for acquisitions and a ton of goodwill. Research Jewel, I see.
Yeah, Jewel is prime
Joel
example.
Greenblatt thinks that this is undervalued. Interesting.
Wait a second, has he said that, or is it part of his?
Or is it part of this?
Is it part of his magic formula?
I don't think it is.
I think you own this.
I think you do too, Mo. So.
Yeah.
Oh, okay, maybe I do. Fishy
Yeah.
face expand. Paul, how is your head so round? That's off the topic. Mo, what do you have?
Is my head round? I
What do
think
you-
my head's square.
I do think you have a roundish head.
Roundish face, maybe.
Yeah.
Head, I think, is square.
Mo, what do you have on momentum over there?
All right. So I've made a video on what's called the 50% rule. You take your high, your previous high and previous low on the chart, zooming out a year and a half, and kind of right in that middle range is the halfway point. And this is where you can see that this stock since about March of last year, 2020, has had a very difficult time breaking through that resistance point, and it's kind of getting up there again. So this is where we come back to that overhang. This is just a lot of resistance pushing down on you, on your stock. So the odds of this stock price coming up through here and making some new highs over the last year is not in your favor. What it's going to take is a lot of volume, and again, it goes back to the same thing as the last stock. We need something, some kind of event, some kind of new product that's really going to drive volume and push this thing up and continue to go. So that's Altria Group right now. If I'm looking at this, I'm actually thinking that Philip Morris is better from a technical standpoint, just because of this overhang and this 50% rule. It's going to be very difficult for this stock to break through and go towards $60 a share.
Yeah, the overhang in Paul's pants is frothy today. I would say that Edward is asking Bats is the best. That's British Tobacco, I think. Or is that BTI? We can look at that later if we have time, folks. But so final take on Altria, Paul. You're avoiding at the moment, right? You think Philip Morris is a little stronger?
I think I like Philip Morris a little bit more. But you have to remember one thing. Now, because the multiple wasn't as good, but they had more growth. The hard part is, guys, like literally cigarettes are a dying business. But as I've told you before, remember, whenever we want to tax anybody, what's the first thing they tax? Besides rich people.
Tobacco and
Tobacco
alcohol.
and all these things, because they sit
alcohol.
there and say, hey, listen, if you want to smoke, you're going to smoke anyhow. You have to get a really, really good discount on this company, get a good dividend, and hopefully they're using the rest of their cash to buy back shares. That's how you're going to make money on these stocks, because I don't see the growth potential for these companies.
Paul, okay, folks, that was Altria Group. Paul, Rupesh is asking, maybe he's talking about maybe adding 2 more pillars, but the idea of like, what do you think the stock's going to do in 5 to 10? I know what your answer is going to be. Please.
What's my answer going to be?
You have no idea.
I have no idea, but when I buy fundamentally on these 8 pillars and do a little more research over a portfolio of stocks, I think I know a pretty good idea of where they're going to go in the next 10 years, and it's probably going to be higher. Which ones individually, I have no idea. So the whole point of 8 pillars is facts. Here are the facts. Your extra 2 aren't facts. It's my assessment.
Speculation, really.
Yeah, I'm speculating what's going to happen. I just don't want to get involved with that right now.
Yeah, we get this a lot in our comments when we do, especially a hype stock, as people say, Paul, you're just wrong and you don't understand. It's like, well, we're just trying to follow the facts, what's in front of us. So, okay, let's keep going, guys. Questions out there. Don, you see anything I'm missing?
No, not right now. You're good.
Okay. I'll be sure, for you watching out there, I'll be sure to get Don every time he clears his throat on that mic. I'll get that right in your ear there. That'd be perfect. I love you, Don. Okay. Yes, that's right. And A. Bitler is reminding us that the MILF pillar, yeah, that's from last. You guys are hilarious. Paul, people are asking, Gary's asking, what are your thoughts? Other people have asked me in our private life, what are your thoughts on the cannabis industry? And just give us your general thoughts on the rise of that.
So cannabis is the new hype. I've been pitched so many marijuana investments. Paul, we're going to be huge. We're going to be huge. Yeah, great. Not everybody can be huge. I want to wait till the dust settles, find the biggest players at the best value, and go from there. It's just like cars 100 years ago and airlines 100 years ago. It's the next big growth, and how many of them went under. Literally every single person who pitched me, nobody got to do what they said they were going to do. We're going to get this. We're going to get the license for Ohio. Nobody got it. 8 people in Ohio got it. Not a single person who pitched me, oh, we have the inside track. No, you don't. Every hype thing in the world, I just avoid it. Me as an investor, I want to wait till the dust settles and everybody hates an industry and go, okay, that company's making a lot of money. Let me go invest in them at a much lower price.
Mo, what are your thoughts about cannabis stocks in terms of momentum and options?
You know what? Well, from an options perspective, I'm not even touching them just because of the volatility, the complete unknown. The government has to have their hands on this in some way. Let's see, like Paul said, we got to see where the dust settles on that. It's going to take a very long time. Again, I've been pitched so many times to invest in these things. I was in the barber shop one day and the guy was like, "Hey, I'm one of the final 12 candidates to get this thing in Ohio." And I said, "Okay, well, call me when you..."
For cannabis?
Yeah.
Oh, weird. I met with 8 people who said that.
Oh, well, there you go.
By the way, I mean funny, but the whole point is everybody had their garbage.
So was there 8 in Ohio?
I believe
was
so.
Was it 8? Okay, so if I was like, well, call me when you get to be one of the 8, then we can talk. But
and guess what? I'm willing to pay a higher price after they've been approved.
Exactly.
Gary's asking, do you think Philip Morris or Altria will buy into the cannabis craze?
1,000%.
My problem that I'm thinking about with Philip Morris and Altria is they haven't done anything different for the past
20 years,
it's cigarettes. Years. The newest thing is Juul, and all we're talking about is these different lung cancers that are coming from Juuls.
And Altria bought Juul and then wrote it down $7 billion like 2 years later.
So that's my problem with the industry. There's just nothing new. So I would hope that these guys are 2 big players when this cannabis stuff takes off.
Some people are asking for Imperial brands. We can certainly look into that if we have time. The next stock we're going to do, Paul, is Diageo, D-E-O. What is Diageo again?
By the way, can I make a fun announcement?
Please do.
We are in contract on an apartment building in Columbus.
Oh,
I'm not going to discuss the unit size or anything. We're in contract. We're very excited because it's been a long time. If the contract goes through, we end up buying the property, which is probably about a 50% chance. It's about a coin flip. Then we will be doing some sort of video down there, going through the property, what we're going to do to it before, during, and after. So this is going to be exciting. It's going to be an actual real estate play that we put into the channel, showing everything we're doing, how we're going to do it, and the money and numbers involved.
Oddly enough, Paul, is I put in a bid with a partner on an 8-unit complex here in Akron.
Did.
So very monumental thing. My first real
I was
estate
actually
deal.
jealous of that deal.
Yeah, we'll see how it turns out. So we put in a bid for an 8 unit, and obviously we will document both and bring this to you as our YouTube viewer, and of course our patrons, of whom we dearly love and want to hug and kiss. Okay, Paul, should we get into Diageo, DEO? This is a London alcohol company.
Aren't they the ones that have, oh wow, look at that. Johnny Walker,
Oh, I like that.
Smirnoff, Crown Royal, Captain Morgan, Bailey's, Tanqueray,
I
and
love
Guinness.
Tanqueray. Oh my gosh,
Is it Tanqueray or Tanqueray?
I mean, I think it's Tanqueray. It's spelled
Q?
spelled weird, but I put it in everything. My Moscow Mules, my gin and tonics. I even make gin martinis with it. I love it. But don't bash me if you're not a Tanqueray fan. Paul, go ahead.
All right, $95 billion market cap.
Good Lord.
This PE ratio, 62. That's a slight X.
Yeah, boy.
They do hit the profit margin, though. It is over 10%, and they pay a 2.3% dividend. On $94 billion, that's about 1.9, call it $2 billion here.
Okay.
$2 billion dividend, okay? So we have one X
And one
on
check.
this nosebleed PE, and then a check mark on the profit margin, and a $2 billion dividend that we have to go to the free cash flow and see if it's going to work.
Revenue growth is pillar number 3. Paul, what about the revenue, baby?
Let's see. Do people like their alcohol? Looks like they do not.
Uh-oh.
15.55 down to 14.8. I will say this. This includes COVID. So it was increasing. So I will say, even though this is an X, guys,
Go on.
you got to look at the data in between. Their year ended in June of 2020. That was the middle of COVID. They'd already absorbed like 4 months of COVID. So they were growing, collapse. So it is still an X, but this is why we do the 8 pillars and we aren't rigid about it.
Pillar number 4 is profit growth, Paul. How's the profit going?
Another X.
Probably down last year?
Another X. 3.3, 3.3, 4, 4, 1.8.
Boy.
So again, it's an X, but let's keep in mind COVID X.
Shares outstanding is pillar number 5. We want this going down as well.
It is down, baby. Check mark. 627 to 586.
Nice. Current assets over current liabilities is pillar number 6.
Current assets of $16 billion.
Okay.
Current liabilities of $9 billion. Chickadee check.
Great. Free cash flow growth is where the rubber hits the road here, Paul, with the free cash flow over the past 5 years.
Okay. $3 billion, $2.1 billion.
Uh-oh.
No.
So X there. And then we have 3.3, 3.4, 3.4.
Divided by 5, the free cash flow is 3. Call it 3.
Now remember, again, free cash flow drop because of COVID. We're going to call it 3. I'm willing to go, 20 times. As developing markets get, like to me, they have a lot of really good brands. And as the rest of the world and the emerging markets get wealthier and wealthier, nicer brands are going to do better and better. So from a long-term perspective, am I willing to bet on somebody that has and by the way, I think they own a piece of Louis Vuitton or something in there, it said. So am I willing to pay $60 billion for this company? I think I am.
The current market cap is $95 billion.
So it needs to fall quite a bit. It is an X on that one as well. But there's a lot of X's here that are COVID-driven, guys. So this is what I love about us doing this. It shows that there is something to be looked at. You have to look at things as a story. That's what 8 pillars are telling us. The story is telling us that during COVID, they took hits. Understandable. People couldn't go out to restaurants. They couldn't go to bars. They couldn't do any of these things. That is understandable. Let's see how their free cash flow was in the last 12 months with a rebound. Let's see if it got better. Oh my God, it got way better. It went to 3 points. It's actually higher than it was as their average. So I'm going to look at this one and I'm going to keep my eye on it and buy it when the price has dropped. Let's add this one to our watch list here. Let me look at the options here.
Before you leave that page, Paul, what is the target price? You know, it's currently at 160. What would you like to pay for this company?
100.
Okay.
So
Options?
DEO. Let's go out.
And can you make sure you write, if you write notes, Paul, if you're writing on that gray, people are having a hard time seeing it a bit. You want to head over to Mo for momentum before you get to options?
Yeah, let's do that.
Mo,
Yeah.
what do you got over here?
So this is interesting. I'm not really sure what it means, but it's interesting. So if you look, we have the stock consolidates a lot. So consolidation means that it kind of sits in a range and just bounces up and down between that range, and then it drops, and then it consolidates, and then it rises, and then it consolidates again, and here you had this big jump up. So it seems like this stock is very affected by announcements or earnings or something to that effect. And even when you do have these big jumps, you see you were in an uptrend right here, and all of a sudden this happened, the stock fell, and you turned right into a downtrend. Where was the other one? Right here. Here was this gap down. You were going up, and all of a sudden, boom, it dropped down on you. So right now, it's turning into an uptrend, and I want to say that's great, but I'm also saying, okay, I kind of want to see when their earnings date is, because I'm expecting, based on history, because we're consolidating right here, we could drop down here in some range. So I'm staying away from this one. I don't want to have, just based on history, like I said, a chart is a story, and you kind of get a feel of every chart that you go through, and this is a perfect example of getting a feel of something and seeing things and recognizing them and being willing to take that risk or not.
Paul, Fishy Face is saying this is not. Wouldn't this boom when restaurants and pubs reopen all over the world?
Well, I think they already have started, and maybe it does boom, and you have to look at hopefully people are, but I look at it saying they're keeping the PE very high. If this was a PE that had dropped a lot because the price fell as the earnings fell, I'd be very, very excited. But the PE is still high as the earnings collapse. So even with the earnings doubling up, it's still an expensive stock at 30 times earnings. So we still need it to drop quite significantly. So if I want to buy this thing at 100, and I'm going to go 198 days out to August 20th, 2021, I'm going to get roughly 60 cents for that. That is 0.6% divided by 198 days. So you're roughly going to get 1% annualized return, give or take. You're not going to get much return. There's probably not a lot of volatility in the stock. So you're making about 1% of your money. It's better than zero, but I wouldn't be doing that. I'd wait for the volatility. I'd wait for hopefully the stock to fall. And then when stocks fall fast or go up fast, volatility is huge, and it affects the pricing of options. And if you're a seller, you can make more money that way.
That was our take on Diageo, the alcohol company from UK. All right, folks, let's slow down just a moment. I need to breathe. I get so excited talking to you folks. I would say this. We're coming in on our halfway point here, or past the halfway point in this show. So I want to remind you all that we do have a Patreon. If this is the first time you've seen this and you've never heard of us, we welcome you in. You must be saying, why is Chewbacca/Teen Wolf hosting a show with two mega minds who are making a ton of money? But the point is, I bring hopefully your thoughts and your inexperienced questions to guys who know what they're talking about. And you can learn way more on our Patreon. We have, how many levels, Don? How many levels are on the Patreon? 3 or 4?
There's 3 total.
Three total. So your basic level will get you the software, which we will spoil at the end of the show. Again, incredible software like Y Charts. It's going to be the Everything Money website. And our Patreons are stoked. You'll see in their comments how stoked they are to be patrons to get that software. Our top tier gets access to Paul and Mo. They literally talk to each other and explain their trades, not through text to each other, but through the Discord channel, so you can hear exactly like that. You get exclusive video content that we're only making for the patrons, and patrons, you know which ones we're talking about, including the live stream, Don. That's tomorrow at 6 p.m., right? The live stream?
It is tomorrow.
Patreon only live stream, 6 p.m. tomorrow night Eastern time. And finally, our middle tier. Mo, expand what they're getting with the middle tier. If day trading and options is somewhat enticing to you, Mo will explain what you're getting and what's happening with his tier, because it's filling up, folks. Go ahead, Mo.
Guys, if this trading on a chart resonates with you, join the $25 tier in the middle, because it is only going to be $25 for another 50 minutes. At 2:30, it is moving up to $49. I am in there all day, every day. I make short videos, 1-minute videos, answering your questions, teaching you guys things. We have built an awesome community. Now everybody's kind of teaching each other, and that's the goal of this thing. So that thing is moving up. It's doubling in price in 50 minutes.
In less than an hour.
In less than an hour. So get in there at $25.
Yeah, I forgot about that.
Get in there for $25 right now. because it's not going to go back to $25. And this value is awesome for what you're getting.
And can we preview the website here?
Yeah, Paul, let me make one more little point here. Folks, if you're out there, and I say this over and over, but I had this feeling for almost a decade, if not a decade and a half, if you feel alone in this process of where do I put my money, if you feel like you don't want to hire some financial advisor whom you hardly know and trust that they're making the right decisions, you can join our community. It's some people think it's overpriced. Other people think that they're paying for it within the first month. The option tradings and tips they get pay for their entire year of Patreon. Two of our patrons will get Tesla Model 3s when we reach 50,000 subscribers and 100,000 subscribers. So there's 750 people in the group. It goes up day by day, but two of you will be driving brand new Tesla Model 3s. It's going to be incredible, and Paul's going to spoil the chart right now. Go ahead, Paul.
Look what I just did.
What is that, Paul?
I don't know. It's something weird.
That's freaking me out.
Okay, so this is the new Everything Money website. This is what I've created. It's going to have your chart. It's going to have some key data down here. It's going to have your income statement when you click across here, quarterly, annual, all that stuff. Everything we see on Y charts will be here now. And for somebody who asked the question, I'm not taking this data from Y charts. I buy the data from another provider, and I spend tens of thousands of dollars a year on it. So either way, guys, here's the 8 pillars. It tells you check, X, tells you what the pillars are. So, this is awesome.
Yeah, so what we're saying is if you want to access this and you don't want to pay for Y charts, a simple low-level Patreon commitment will get you these charts come April, and you can run the 8 pillars on any company you like. You will be your family's financial expert. I assure you, it doesn't take long. It's a patient journey. It's taken me a while, but you will certainly level up your position in life in terms of learning these numbers and getting equating with long-term disciplined investments. Okay, that's it, folks. That's our sell. We love you guys. Okay, the next stock is Las Vegas Sands, ticker symbol LVS, casino and resort, obviously in Las Vegas. They had a tough year, and we're going to look at their financials using our 8 pillars right now with Paul. Go ahead, Paul.
$40 billion market cap, no PE. Why is there no PE?
Well, nobody was there this year.
Yes, they lost $1.7 billion in the last 12 months on $3.6 billion in revenue. Their gross profit, this is tough. No more dividend. These are X's all around, guys. This is gonna be a tough one because we have to sit there and ignore. Let's see here. How are we gonna do this one best? Let's just go to revenue.
Okay, revenue growth is pillar number 3.
Look at this revenue drop, guys. This is what I want to show you. 11.3 to 3.6. That's a 60-some% drop in revenue because of COVID.
Oh boy.
This is insane. So you got to remember this when you're buying this company or looking to buy this company. You don't want to value it on just last year. You want to figure out, like Love, like Southwest, like Carnival Cruise Line, can they withstand it? A lot of casinos have a lot of debt.
Hey, Bitler's saying, what if we just ignore last year and pretend we're in normal times?
That's exactly what you want to do. However, until you get to normal times, you want to make sure they have the ability to make it to normal times without a bankruptcy. That is the big key here. Okay? So on a 5-year basis before last year, they had a slight increase in revenue, 12.4 to 13.7.
Okay, how about profit growth? We can look at that again as well, right?
Yep, $2 billion to 2.7 before COVID. All right, they lost 1.7 since COVID.
So you want to call it the check or next? What do you think? This is a crazy one, right? Because it's
that's
so
the hard.
low.
When I saw this first on the list, I was like, okay, we'll do this, but there's gonna be a lot of. There's gonna be the 8 pillars are almost useless in this.
Well, tell me this, and I've asked you this before, Paul. Is we want to buy companies when they're undervalued and at a low price.
So let's go to this.
But then there's this weird line of like, are they going to completely go away? Where is this line where they're underpriced versus they're completely going out of business?
So let's look at their free cash flow then. Because the free cash flow is the best way to determine, in my personal opinion, a value today.
Okay.
They actually had free cash flow in the last year. Because they were probably getting a lot of reservations that were just not being honored because nobody was allowed to go. So let's ignore last year. In previous years, it was 3.7, 1.9, 2.6, 3.7, and 3.8.
Okay, so the average free cash flow over the past 5 years is 3.1.
3.1 times 15. The reason I say 15 is they tend to have more debt, and you have to assume as a value investor you want to buy at a discount. So that's 46.5 billion. Guys, I'm avoiding it. And here's why. It's currently selling for 41 billion. So what's the discount you're getting? You have to sit there and wait for it to get back to cash flow to making more money. And do we have an idea of when Vegas is opening back up?
No.
Right, Mo? What do you think?
No, we don't. I mean, when we were supposed to go to Vegas in December, everything was completely shut down. And I said, okay, so can I book something in March or April of next year? And they were like, oh, we have no idea. So everything that's happening on the West Coast, it doesn't seem like it's going very well for them. And doesn't seem like their bureaucracies are going to open anything anytime soon. So we'll see what happens. But
Max Equity lives in Vegas.
oh, really? Give us something.
Yeah,
So
here we
maybe
go.
he can explain to us when these things are coming back online.
We are currently at 25% capacity. Wow. So, I mean,
That's what it was. When
Mo and I were going to go to Vegas in December for a Shania Twain concert together.
that is so.
we had matching pink cowboy boots.
Yeah. I actually had the hat, he had the boots. That way we get it.
Folks, can you envision these two grown men in like Daisy Dukes and pink cowboy hats?
Pull up a
Shania
seat.
Twain.
Take a load off your feet.
Listen, don't sing that well, Paul, because this video might get spiked by YouTube
So
for content.
anyway, when I called the hotel, I was like, well, I called them on a Tuesday. We were going on a Wednesday. I said, can we make reservations for dinner and stuff? They said, well, no, it's all filled out. It's filled to 2 weeks out. I said, oh, people are coming to Vegas? They said, no, we have 25% capacity. I'm like, okay, so.
And even for like the tables, they put like big glass up in between. They were telling us, we canceled the trip like 2 days before. We're like,
Yeah.
canceled.
Yeah.
F it, who cares? So
much
either way,
Shania for
I
us.
still think it's an expensive stock based on the free cash flow when it's stabilized. So you have to sit there and wait it out, and it's not even selling for that big of a discount. It's selling for 10% discount. And look at their total debt. Let's look at their debt ratios. I mean, debt to equity ratio is 4.3 to 1. It's pretty high, guys. Now, granted, it's a real estate business, so I get that, but these are ones you definitely want to do a thorough deep dive into the 10K. If you're in our Patreon, get 4 or 5 of you guys who are interested in it to do a deep dive together. Go, everybody split up questions, figure it out, and go look at it. I'm personally waiting on these ones because I have no desire to have these companies at these prices.
All right, that was our take on Las Vegas Sands.
Let me do it. Let me do it.
Go
Let me
ahead,
do
Mo.
this.
What are you
Just
saying?
because it's something different. I want to do momentum on this. And
my apologies. Keep going, Mo.
This is important to decipher that this trading on a chart is not the same as value investing. Because right now, we're starting to creep up into this sweet spot area. So if I'm myself, I would be okay putting one tracker share on this. There's a YouTube video that went out today that explains what tracker shares are. I would put one tracker share on this and see what happens. If we can get some volume in here and candlesticks that go like this, and we get our stochastic into the sweet spot, you can make some money on this thing for sure. So we need to be very clear that trading and value investing are very different, but this gives you an opportunity to do something with the stock right now if you want to.
What's the red versus green? I'm really asking that because I really don't know.
Red means that there's more buyers in the stock at that time. And,
Buyers?
Sorry. Red means that there's more sellers. Green means that there's more buyers at that time.
We're heading into the red, or is it the black? Whichever the bad one is.
Yeah,
that's from Seinfeld.
Okay, guys.
What's our next company?
Well, I have some intriguing requests. Do we still want to do Caesar Entertainment?
I think we just ignore. I think it's
probably
going to
be the
same
same thing.
Yeah.
Okay. One of our patrons is requesting. We've got a request for Imperial brands. I'd love to look at this, Paul. Can you pull up Imperial brands on?
I don't think I can. Give me a ticker.
What's Imperial?
Give me a ticker.
Sorry, give us a second, guys. Imperial brands.
Oh, here we go. IMBBY.
Yep. They're formerly Imperial Tobacco. It's a British multinational tobacco company headquartered in I think that the interest is the stock price has plummeted from years beforehand.
Oh,
And
wow.
So, yeah.
It was at $55. Now it's at 20.
Yeah, Paul, let's take a look.
By the way, look at this, guys. 55 to 20. When you tell me at $55, if you'd seen this chart, and I'd said to you, oh, yeah, I'm going to pay $25. That's not going to go to 25. When was the last time it was at 25? It was years ago. Blah, 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 blah. It happens, guys. No stock in history is ever going to be always a top expensive high PE stock. Find me one that over 30, 40, 50 years is high, even over 20 years. There's always a correction at some point.
Juan is saying this is the best tobacco stock in his opinion.
Might be.
Let's get after it. What is the market cap for Imperial brands?
18.6 billion with a 9.7 PE. Check mark there. Not a good profit margin though, guys. About 2 billion on 42 billion. So it is about 4.5%. So that's an X on the profit margin. I'm surprised by that because the other tobacco companies had like 50, 60% gross margin and 20% profit. This one has 20% gross margin. So that's kind of weird. That's something I would want to look at as to why their gross margin is so much lower. Dividend
Yeah, go
of
ahead. Bob.
9%.
Wow, that's just incredible.
Which is $1.8 billion they pay per year in dividends.
9%, incredible. Right in the chat, if you're in London right now, I think we have tons of UK patrons. Is that right, Don? Just tons of them, I think, right?
Yeah, there's a lot overseas.
We love you guys. We love you. We love you. We love you. Okay, revenue growth is pillar number 3. Paul, let's look at it. Revenue growth for Imperial brands.
39.4 to 41.5. Check mark. Again, guys, not fast growing. This is what I love about look at the financials. Everybody tells you something's a fast growing company. You literally have seen 2 billion, 5% over 4 years. That's like 1.2% a year. I mean, that's nothing, guys. It's absolutely nothing. So keep that in mind. It's still a check, but it's not a big check.
Profit growth is pillar number 4, Paul. Profit growth.
Look at this, 900 million to 1.9 billion. Check mark there.
Yep.
So they doubled their profit in the last 5 years, 4 years, whatever it is called.
Ryan, I got you. I got you next here, brother. Okay, profit growth is good. Shares outstanding. We went to shares outstanding. Want these going down as pillar number 5.
954 down to 944. So check mark there.
Nice.
Check,
Yeah.
please.
Okay, current assets over current liabilities, Paul.
All right, so current assets, cash on hand, essentially 12.4 billion. Current liabilities, 15.85. That's an X right there.
Uh-oh, they're underneath?
Let's see how they looked in the past to see if that's consistent. That is pretty consistent in the past. All right, free cash flow, guys. The big mamma jamma.
Pillar number 7.
And just like the other tobacco companies, very low capital expenditures. So 4.1 to 5. So check mark there. 3.5, 4.1, and 4.1.
Okay, the average free cash flow over the past 5 years is 4.1.
I was going to say it's pretty close to 4.1. Times, not a fast growing company, very low margin, 15 is 60 billion.
Paul, 60 billion. Their current market cap is
19.8.
$19 billion.
So they're selling for 5 times free cash flow. That is a massive check mark.
Wow. Your thought. Listen to the gears turn out there. The silence is killing me. What do you think, Paul?
Yeah, this is interesting. Why is it selling for 5 times free cash flow? I mean, that margin, I don't know why their margin sucks compared to the other guys. Why is that? Why is that?
How old are they? What are you guys thinking out there? If you're a fan of this, Juan, you love this. Let's go back. Juan, why are you in love with, what are we missing, guys? It's very rare that we get a desired
they're
market
cigars.
cap. It's a desired market cap that's 3 times higher than the actual one.
And cigarettes. 244 billion cigarettes sold in more than 160 countries.
Let's get Momentum's thoughts here. Trader Mo, what do you think?
So this thing obviously is falling, and I think that's why people are talking about it. So our stochastic, it is a major downtrend right now, and we can see that this lime green line right here that I'm drawing on top of, that is the 50-day moving average. So last week fell below that. This week it fell even more, and it's going right towards this 100-day moving average and 200. So there's a lot of downward momentum. Look at this giant selling bar today. This red bar right here is what the volume is for the day, and that means that there's more sellers than buyers. So if we keep getting these candlesticks that just keep moving down like this, and it breaks through the 100 and 200-day moving average, this thing could go a lot lower, maybe to this region right here, which is, $16 a share.
So we're looking at Imperial Brands, folks, a tobacco company. Paul, let's not forget that 9% dividend. That's one of the highest I think we've seen on the show.
And they have ample money to pay that dividend. They made $5 billion in free cash flow, and they only pay 1 point what of it every year to dividends.
By the way, this is an over-the-counter stock, OTC.
What does that mean?
It's not in the S&P or anything.
It's because it's a foreign company.
Yep.
It's a 5-ticker foreign company.
Yep.
Juan said, I just like their numbers. They're also behind Blue, which is one of the best electronic cigars. Electronic cigars, and they have many great brands. Okay, thank you, Juan, for the update. Juan, we need you in the Patreon. All right, guys. Paul, what do you think, baby?
I mean, 4 times free cash flow, not even. It's like 3.5 times free cash flow. Why is that? Mm-hmm. Even at their high peak of $55 a share, they were only.
Oh.
What are you looking at?
Nick Lamore just said that they're Davidoff and Monte Cristo. Those
Yeah.
are, I didn't know that was.
Is there less margin in cigar? Because their margin's garbage.
I don't know. I would have to ask Mikey.
Their margin is garbage. Look at their gross margin, their gross profit. Yeah, their gross profit is horrible. I mean, the best it's ever been is like 20%, if not even that. Yeah, not even 20%. Right here. They hit 20% in 2015 for gross. Like, that's so weird to me. Why is that?
I think that just from who I've talked to, I think that there are low margins on cigars.
Yeah, but they sold 260 billion cigarettes as well.
Well, I don't know.
If patrons, if you're excited by this, maybe we'll do a Patreon-only video deep dive on this. Paul,
Now, here's the reason I will not have this for my portfolio.
Go on.
I want to sell covered calls. I cannot sell covered calls here. I'm sure there's a way for me to do it for European companies, but I cannot sell covered calls here. And covered calls are going to add a lot of return to my portfolio. So me personally, I'm not going to buy this, but I'm just really interested as to why the free cash flow multiple is so good.
Guys, for the record, you have less than 35 minutes to sign up for the Mo's Muscles channel for tier in Patreon for $25. It's doubling in less than 35 minutes.
The Patreon tiers are filling up, and if you don't believe us, you can watch them fill up and then pay more later, guys. We're so sorry, but we love you. Okay, that was our take.
We already got two people in the last 3 minutes.
How nice. That was Imperial Brands. Interesting company, and we'll follow up with this one. I love it. Okay, I promised one of our patrons we're going to look, Paul. Tell me I'm wrong. It's a Canadian stock. It's a Corby Spirit and Wine Ltd. Ticker symbol CBYDF. CBYDF. This is Corby Spirit.
It's a small company.
Canadian alcohol manufacturing company. The stock's very low compared to other years.
Okay, I'm not a drinker, so has anybody heard of these things?
Oh my God.
J.P. Weiser, Lamb's Rum, Polar Ice, McGuinness Liqueurs.
I've never heard of any of these.
I have not. Ryan, tell me. Ryan, you're hanging me out here. Tell me why you love this, and we'll get after it. Paul,
Get at me, dog.
what is the market cap for
385 million, PE of 16.5, check. Huge profit margin, guys. Huge profit margin. Basically 20% over here. So check mark there. So 2 check marks and a dividend of 5%, which means they spend about $20 million a year on dividends. Okay? So for a small company to pay that much in dividends is pretty impressive.
What was the percentage on dividend, Paul? I lost
5%.
Oh, that's very nice. Okay, revenue growth over the past 5 years for Corbin.
I did. I bit my cheek when I was eating earlier.
Isn't that the worst?
Yeah, it hurts.
Go
All
ahead.
right. 101 million and 111 million. So again, for a small company, it's not growing that much. In fact, it went 101, 105, 111, 110, and then 111. They actually went up during COVID. That's kind of weird. Maybe they're going to have a good year.
Okay, pillar number 4. We got 3 checks so far. Pillar number 4 is profit growth, Paul. How are they doing?
Holy consistency.
Wow.
19.18 to 19.87.
Check, please.
They are very consistent.
Okay, shares outstanding. Ryan, thank you for this. Our patron, Ryan, thank you for this
And like a typical
suggestion.
Canadian company, consistent. Same number of shares outstanding. Check mark there. They have not gone up. They have not gone down. Check mark.
Great, 5 straight checks. Current assets over current liabilities is pillar number 6, baby cakes.
Why do I feel like this is going to be really good? 130 million versus 27
Jeez.
and only 43 million in total liabilities. So this is the monster of all checks. They have $90 million. Man. So you have to now, guys, so here's the deal. The company has 130 million in cash.
Go on.
And total debt of 40 million, roughly. That's 90 million you now get in your pocket when you buy them. So you have to take that off the market cap of 385. So right now, essentially, you're paying, let's call it $300 million for the company. So it takes the PE now down significantly.
Which was already a check.
Which is already a check. It takes it down to like 12. So this is very, very good stuff. So far, I like this company a lot.
This is Corbin Spirit and Wine, a Canadian alcohol company. All right, Paul, let's keep going.
Oh, wait a second.
Go ahead.
I'm a little concerned.
Uh-oh.
Let's look at the cash flow.
Uh-oh, Paul.
Here's what. Oh, cash flow's good. Let's go look at it.
Great.
Ready? 23 to 34.5. Check mark. Yeah! 18.3, 20.5 or a set, whatever it is, and then 21.7.
Whatever it is. Okay, the average free cash flow is 23.6, Paul.
It's selling for currently, on the $300 million number, what is that, 12 times free cash flow? 13 times free cash flow. Check mark there as well. Oh, let's see here. And that's on the average. It's actually up in the last year to like 9 times free cash flow. It's actually a good one.
Yep.
Let's see what it is the last 12 months.
Mo, you want to take a look at momentum while we get back to Paul?
To be honest, I went on my Schwab charts for this, I went on my Yahoo charts for this, and then I went on the charts I pay for. I don't have a chart for it, so I can't help you out with momentum. Sorry.
Why would that be, Mo?
I have no idea.
Ryan is saying they have commissions on Jameson and Absolute and many others. What does that mean?
There's not a lot of volume here. Look at these. Look at this. Like,
So the thing is, I went to the volume page, and it told me that the volume is 87 as an average. 87.
87
That's
shares.
the average volume. So
87
don't
whole
know.
shares. Well, we
don't know.
could corner the market with our Patreon group. This is Corbin Spirit. This is Corbin Spirit and Wine, ticker symbol CBYDF. If you're just joining, and they have all checks, Paul, and they have an absurd amount.
Was it all checks?
It was all checks. They have absurd amount of assets over liabilities, and their PE was even better. This is interesting. And Paul, so unlike the all checks, sometimes in the stock price is still relatively high. This one is very low in comparison.
we can do an everything money short squeeze.
Yeah, it was. That's right. That's right, Mo. Great point. Let me catch up with. So Ryan says, I guess they make commissions on those brands sold in Canada. So more research, but yes, wow, what an amazing. Paul, this is amazing, right? This is pretty interesting.
Yeah, it's pretty. I mean, it's selling for a low multiple. I mean, they pay out. Selling for a very low multiple. By the way, can we look at GameStop real quick? Somebody mentioned GameStop here.
What's it doing today? Oh Lord.
Look at that, guys.
What's happening?
It was what 400. I mean, look at this.
What's our market cap now?
4.2 billion. Well, what did it hit? 60 billion? What did it hit before?
Yeah, it was like 60 billion.
Sick, guys. By the way, I hate to say it, my GameStop shirts came in that day. It plummeted. So I'm the one that caused the problems for.
If you're joining now,
I wish they went to 1,000.
If you're joining now,
I wish they would have gone to 1,000.
we did Philip Morris today. We did Altria Group. We did Diageo. We did Las Vegas Sands. And we did Imperial Brands and Corbin Spirit and Wine out of Canada. The most impressive numbers came out of that Corbin. I have to thank one of our patrons, Ryan, for bringing us that one.
Q&A time. That's what Longshot
guys.
wants.
Yep.
So one more cheap plug. Again, if you're first time seeing us, just head on over to Patreon and look at the tiers. It's absolutely quite absurd what we're giving away in our tiers comparison to other people. There are very, very famous YouTubers who have 20 times as many members in their Patreon, and for the same amount of money, you are getting a t-shirt. What you get in our Patreon is the day-to-day updates of stock trades. You get exclusive videos just for you, exclusive live streams where we answer your direct questions, which will be happening tomorrow night at 6 p.m. Eastern. Join us in Paul's mansion, where we're going to go live and talk just to you folks. And so it's an unbelievable value, and the patrons who are in it will agree. We're not just blowing smoke up your tush. This is real stuff, and we are incredibly committed to you this year, making more content. This is taking over our lives. Paul and I have talked about working full-time at some point here, and we already do 20 some odd videos a week, and so we're going to increase the funny videos, the house tours, the giveaways. We're going to go over the country and do everything, all for our patrons. And of course, in April, this amazing software, which is going to blow your mind, is coming out. So much exciting stuff is coming forward. So I love it, guys. Okay, Q&A time, the fun time that we like to let go a little bit. Okay, Paul, those shorts are super tight today. That DILF bod you have there.
I don't have shorts on. I have shorts on underneath.
I just mean, which whatever you're wearing. I mean, the DILFness is up, and it's just it's incredible.
I'm wearing my Bamboo Avenue shorts.
It's hugging your pasty white butt cheeks. And that's just incredible.
Bamboo Avenue, guys. I like these shorts.
How does Paul feel?
I got these from Mason's brother Connor. He told me to get.
Oh yeah, Don is getting an exclusive look at Paul's undercarriage and shorts. Yeah. The people love Paul's shorts. David, am I chopping wood in this shirt? Yeah, I do love plaid. I'm always into this. Yes, nice legs, Paul. You have been doing your leg exercises. I would say they look really great.
Before, but they're even better now.
Paul will be in Mexico next week with Mo.
Not next week, next Friday.
I'm sorry. So at the end of next week we'll be doing more. I won't be there, unfortunately. Thanks for that invite, Paul. But we'll be doing Mexico. We'll be doing Mexico on location. Paul will be there. I'll be here. Do you think there'll be some regulations or limits due to what happened in Robinhood? Valencia is asking. Of course, I think.
I just had somebody else today message me about Robinhood saying that they said something like somebody said something like, oh, I'm really getting into Robinhood. I'm learning a lot from it. And I go, what exactly are you learning
what are you
from it?
learning?
And they said, I guess I don't really know. I'm like, oh, okay, cool. And I'm sure there's gonna be a lot of, we had a big discussion about Robinhood 2 weeks ago on here, right? And there is rumors floating that, was it Citadel paid them $80 million, something like that? But what did you guys expect? I mean, I think a lot of it had to do with regulation as well, and they can sit there and protect themselves. But I guess I have to say, like, you can't complain later when somebody does what's expected of them. And these companies they want to generate revenue. Robinhood, how else were they going to make money? You could go in there for free and buy. I mean, they have to make money somehow.
Not only for free, but they would give you free shares.
They give you free shares for signing up. I mean, they have to make money somehow.
Yeah.
So don't be shocked when don't be shocked when the shark bites you when you're floating on the surfboard looking like a seal. Is that too long of an analogy?
I haven't heard that analogy before, Paul. That was great. Chris is asking, is the app for Android? The phone app will be second, folks. The website, the computer website-based version has to come first. And when we smash that, we will move on to the phone apps. Am I right, Paul?
Yeah. And guys, I want to just say a personal thing.
Please do.
Let's not talk about this big guy versus little guy thing in a way that's kind of negative. I get it. But this is why we have this channel, because I'm anti-big guy, I'm anti-little guy. I'm just pro doing what's right for yourself long term. If you make a mistake, there's nobody to blame but yourself. You can't be shocked when decades and decades of Wall Street shenanigans and getting bailed out and all this stuff all of a sudden comes out and, they paid somebody for information. What did you expect to happen? What did you honestly expect to happen? At some point, you gotta take responsibility for yourself, learn on your own, and get rid of all the noise. I've heard it so many times. I always tell the story about in 2008 when a friend of mine sued their investor group because they lost their money in a real estate deal. And I said, was that your first time investing in them? Like, oh no, I invested in 4 or 5 of their deals and they all doubled, tripled my money. I'm like, oh, so you didn't care when you were making money, but when you lost money, suddenly you said there was fraud. Yeah. He goes, but there was fraud. I'm like, if there was fraud at the end, there was probably fraud in the beginning, in the middle, and you just didn't realize it. By the way, there was no fraud. The lawsuit was thrown out of court. They were just pissed they lost all their money in a downturn market.
And it's funny, when GameStop was running up, nobody said anything for those first couple days.
Oh, by the way, I was told I was wrong. Oh, you're wrong, Paul. You're wrong, Paul. You're okay.
It wasn't until the buyers couldn't buy anymore or whatever they couldn't do. That's when everybody started to complain. But they didn't complain when they were making tons and tons of money.
If I'm missing it and this is going to the moon, you shouldn't be upset you were locked out from selling. You wanted it. Go to the moon. And I'm not saying you guys. I'm talking about anybody from the outside watching in. If it was going to the moon, why would you care about being able to sell or not?
You should want to go to the moon. Yep.
Fine, let it go. I mean, I just want to get away from the whole negativity of this person screwed me. No, I'm not saying they didn't. But let's just change the mindset from somebody screwed me to I made my own decisions. I made the wrong decision. That's fine. I've made terrible decisions, guys. We have a chat in the Patreon. It's about our big losses. I go in there and talk about my big losses. I've shorted Amazon. I shorted the S&P. I got lucky timing it right last year. And guess what? Complete luck. Just like when you guys come out and tell me, oh, Paul, you were right on this. I'm like, no, guys, I'm not right in 3 weeks. I'll be right over 3, 4, 5, 10 years, not right in 3 weeks. Just like I won't be wrong in 3 weeks. So that's my take on it.
All right, let's just calm down, you two. Benjamin's asking, are you still holding your IMBBY stock that you bought live on the show?
No, I sold that when it made, 12, 13%? I did it for fun.
Paul, what are your thoughts? What does it take to be a full-time day trader, and can you make money off that? Mo, what do you think?
I was the one to answer that.
I mean, if you want to do this for a living, you have to have a nice pot of money to do it with if you want to live off of only that money. So, I mean, I would think you have to have at least $100,000 to do it and live a comfortable lifestyle. Now, if you want to just stay home and trade with $50,000 and see what you can do, the way that I trade, it's rather conservative. I'm trying to make short amounts of money where I have the highest percentage chance of making money. So I've said this before, and I've said it in the Patreon group chat, which ends in 20 minutes. Buy low, sell high. That's what they always say. I always say buy high, sell higher, because I want to buy where I'm going to have the biggest probability to make money. So that means that I'm going to get smaller percentage returns. So I'm going to need some more money to trade with. So I think it's going to take $100,000 to be able to trade with, but everybody's different. It depends on your living situation.
Paul, in general, Chris is asking, what are your target percentage returns annually? Is that too vague of a question?
No, I actually like that question.
Go ahead.
I don't look at a nominal return. I want to create what's called alpha. I want to beat the market over long periods of time. Without options, my goal is 2 to 4% beating over time. My strategy has tended to do better than that, depending on the time of, if you go back a long period of time. I am not beating the market anymore. About 3 years ago, it's when I stopped beating the market. But again, because of my short and being out of the market, I'm okay with that. So I've trailed the market since 2003 as of 3 years ago. I am very, very confident that I will end up above the market again, significantly above the market over long periods of time. I actually personally believe that over long periods of time, with a lot of fluctuation, I will be getting 15% plus returns in the market, including my options plays, which are very important to me. That's what allows me to do those things. But not including the options plays, I do think I'll get 12 to 15% returns in the market over long, long periods of time. That means there will be 2, 3, 4, 5-year stretches where I don't do well, maybe even 10-year stretches. But over long periods of time, I do believe that just in stocks, I can get a 15% higher return because I have the stubbornness of staying quiet and not caring when the markets are booming. Just today, Matt, my chess coach, messaged Mo and I and said, this market's insane, what is going on? It doesn't faze me at all. It doesn't even close to faze me. My brother goes, Paul, are short, it's getting worse. It doesn't faze me. Literally zero phasing, and that's very, very difficult to do. I have 9 stocks. Every single one of them I have profit on. Don't care. I don't care that I have profit today. What I care about is, did I analyze the business the right way? If I have a portfolio of 20 or 30 stocks, did I analyze them the right way? I hate to say it, guys, but that is the most important aspect, and that's why I know I will beat the market. Anybody else was saying this to me, I'd be like, sure, got it. I've proven it over the last 5 years. The market's gone nowhere but up, and I've sat there and said, overpriced, don't care.
Just a reminder, if you're out there, Paul is an enormous fan of putting 90 to 95% of your total retirement funds into broad-based ETFs that will get you a balanced, sort of slow rise to a great deal of wealth. All these stocks that we talk about is really maybe that 5 to 10% of fund money that you want to play with and stay active. So a lot of people are asking ETFs versus stocks. Please, I would guess not to put your entire life savings into some more volatile stocks. Wouldn't you agree, Mo?
Yeah, if you're the average investor, put money away, put money in ETFs every month. Let them ride over decades and decades and decades, and you will do very well at the end of your working career or whatever you're going to call it.
I want to answer Christopher real quick.
Go ahead.
Christopher asked, were you buying your March of last year? Lots of great deals then. Christopher, there were good deals then. There were not great deals back then. There were a few great deals. I was still like, okay, S&P's at 2190, still overpriced. Still overpriced. I know it sounds crazy to think that the market went from 33.93 to 21.90, and I wasn't saying amazing deals. It's still overpriced. Did I still find good companies way more than today? Absolutely. And I have owned 15 or 16 companies since then. I've sold 6 or 7, kept 9, added to positions, but I have not found the great I want to get to the point, and we will get to a point where if there's so many good deals, I just go, which one do I buy? That's what I want to get to. We will get to that point. How long? I don't know when that's going to happen. But there'll be a time when you guys come to the show and go, Paul, you're saying there's great deals, and that was 6 months ago, and stocks are still down. They're still And what do I say? The same thing I say about today. Just be patient. You're buying a good cash flowing business. Eventually it will turn. I do think that the pendulum swings from side to side, guys. And right now, in 1982, guys, we had the pendulum all the way over here. It was all the way over here. And it swung all the way over here to a much higher level. This is where the lowest values in history was 1982. We're now at the highest values in history. I think at some point we got to swing back over here and somewhere in the middle. I think it's going to be a long, long route down and staying down for a while. And you got to be patient. You got to realize you are buying companies, not buying ticker symbols. You are buying pieces of companies.
Jay brings up an interesting point. He says, hearing overpriced and March lows in the same sentence sounds wild.
I know, it does. The market was still overpriced in March. Now, were there good deals out there? Absolutely. Were there great deals? A few. Not tons, but there were great deals.
Paul Llewellyn, Paul is writing a book. You wrote thousands and thousands of words of a book.
I wrote 37,000 words, and I feel uncomfortable writing a book. I feel like it's premature for me.
Well, I know you struggle with prematurity. Let's keep going. Paul, someone says Someone just said, when do you
Mom
sell?
doesn't think so.
When do you sell a stock? Good Lord, you're talking about Sharon Kirchanen. How dare you? When do you just? I'm sorry. When do you sell a stock? It sounds vague, but like, what are your thoughts on? Okay, we've done a great thing. When do you sell? Because you're buying and
that's a great
selling all day.
question.
Yeah.
If I sit there and say, okay, guys, a stock is selling at 10, I think it's worth 40. Okay, let's say it meanders and gets to 40 eventually. Well, let's say I look at the numbers again at 40 and go, oh, it's worth 55 now. Fine, let's say it immediately goes to 55 next day. If it's still a good company and my basis is based on a 15% return, why would I not want to still own it at 55? I'm going to sell it when I feel like the value is maxed out, I'm above the value, and I think the future prospects aren't as good. The story has changed. It's not a set in stone number. And by the way, when it's going from 10 to 40, as it gets closer to 40, I'm being extremely aggressive on covered calls. I'm selling covered calls at 40 when it's sitting at 38 bucks. I'm gonna make a ton of money waiting for it. They get called away from me, fine by me. I can buy them later if I like it. But it's always a constant evaluating now when I say constant, every few quarters you evaluate the company, is it still in line? And the 8 pillars are a great way to do that, of just looking at overall the company, how it's looking. If there's anything that comes up alarming, you make a decision then.
When do you sell a stock at a loss? Moby asks.
The second I think I was wrong on the assumption.
Second.
I mean, if I think, oh my God, yeah, I was wrong on this thing, out, see ya.
We're trying to teach you, or at least assist you on your thinking of being right and wrong. this is interesting. Martin asks, do you think because, this is a really interesting question, Paul, do you think because of your method, your trading or investing may be flawed because you underperformed in a hot market?
Exactly the opposite. Exactly the opposite. Because of my method underperforming in a strong market, all the more reason I believe in it. Because every value investor over time does poorly in strong. Look at Warren Buffett. Warren Buffett has not outperformed the market in the last 10 years. It's so funny, glad you brought it up. Literally, I have people who run family offices who say, oh, you're wrong because look at the last 5 years. Great. If you understood history and value investing, you'd realize they do worse. Value investors do awesome when stocks are low. I made multiple 7 figures in the crash in February and March. Multiple 7 figures. Raise your hand if you made money between February 19th and March 20th. I'll wait. Okay, I'm not worried about it. I'm absolutely, because of me doing worse as things go better, all the more reason. Because I also look at what's doing better. GameStop, Tesla, all these ridiculously overpriced companies, it makes me feel even more confident in my assumptions.
Paul, I think you took us out to dinner because one Friday you made like $4 million on this huge crash, and you were like championing yourself through the hallways. I mean, we were waiting for that crash. But
I don't know if it was for $4 million.
Well, maybe you don't recall, but
I don't recall the $4 million, but it was a lot of money that we made in 1 month. I mean, I gave free lunches like every single day. We have a thing in the office where the market's down more than 1%. I get everybody a free lunch the next day. That was literally a month straight of free lunches. It was incredible.
Okay, guys, this is really, really incredible. All the comments. I would say, folks, we're growing so rapidly. We will get to a point where these comments will just be flying in, and yeah, it's going to be overwhelming. It almost is at this point. So, okay, guys. Paul, should we wrap? I mean, the comments keep coming, but
And by the way, you'll be able to see my portfolio if you join the Patreon. You'll see it. And the list of, I have 30, no, I've sold some. I have like 25 expiring options on February 19th. I had 34 at one point. I've sold like 9 of them.
Okay. Patrons, we'll see you tomorrow night, 6 p.m. Eastern at Paul's house for a Patreon-only live stream. We'll probably go 90 minutes again, take all of your questions. And yeah, Trader Mo, what are your thoughts?
You guys asked some good questions today. You have 10 minutes to get in, and the price of my tier, Mo's Muscles tier, is going up to $49 in 10 minutes. So 10 minutes left, jump in there, come talk trading with me, ask all your questions, learn all this stuff, and make some money.
We appreciate your support. Make sure you tickle that thumbs up on your way out. We love you guys. Patrons, we'll see you tomorrow night. And join us every Tuesday and Thursday, 20 videos a week. We love you guys. Thanks so much.